Ed Rogers advises investors on Japanese-focused hedge funds. He's the CEO of Rogers Investment Advisors, which is based in Japan. But this week, he's here in New York, where he participated in a Bloomberg-linked panel on Japanese investments. You actually were with me earlier this week, and it was all about making the bullish case for Japan. You went as far as saying, Ed, that you would call yourself a bull on Japan.
Absolutely. It's not the popular opinion, but we think that in a $3.5 trillion economy, there are many, many, many different ways to make money. You just have to be intelligent and thoughtful in your approach.
Well, that's true with everything. But I guess, what I got from the panel, you guys were saying, yeah, the macro picture isn't so great, but if you just focus on the macro, you're going to miss some really good micro stories, and that's true.
Absolutely. I mean, when we're talking about quarter-on-quarter numbers, I think the biggest surprise to the upside recently has been Toyota. Toyota coming out and saying they've repaired 90% of the factories that were damaged. 90% of the industrial capacity that was damaged in Toyota has been fixed, and that's happening months in advance of being predicted. So
they're coming back online much quicker.
Much quicker, and they've got inventory they've got to fill. There's a case for the third and fourth quarter being very, very strong in Japan, just to refill inventory that's drawn down, because obviously the supply chain was severely disrupted.
And we do on Friday get that 2012 profit forecast, some guidance from Toyota, so we'll really get the clear picture. Because of the quake, because of the tsunami, you can't ignore the pictures that are around Japan of tremendous piles of things that need to be replaced, whether it's couches, whether it's cars, you name it. There's also the rebuild. That's a good short-term play in your view, obviously.
Yeah, I think you have to put these pictures in context. And you need to remember, the area affected in Japan by the tsunami it's far north and east, and it's a fairly rural area. So we're talking about mostly fishing and agriculture. This is not the industrial heartland of Japan. This is sort of the equivalent of a tsunami hitting the coast of Maine. It's not really going to affect production facilities in Detroit.
Right.
So people need to keep that in mind when they see these pictures. The core strength of Japan has not been is anywhere near as devastated as that coastline.
And I know you can't name names, but I looked at a bunch of the names, the Japanese stocks, whether it's Fanuc. Now, that's a stock that's done really well. It's up almost 50% in the past 12 months. It's a robotic company. But you look at something like Sony, it's down 28% this year. And these are all ADRs that we're showing everybody. Honda's down about 6%, although it's up about 31% over the past 12 months. Why do we see some disconnect? I mean, Adam also talked about the ETF. I mean, it looks like U.S. investors don't want to have anything to do with Japan.
I agree. I think the thing to keep in mind is if you take a long-only approach to Japan, that is a very, very challenging way to make money. In the hedge fund world, where you have long and short picks, that's where you get a much more effective profile in addressing Japan. And so we think investors need to think about that. Again, you've noted here's some stocks that are down a lot, here's some stocks that are up a lot. You have winners and losers. Any market where there's winners and losers cries out for an equity long short hedge fund to try and make the best of both worlds there.
Pick and choose.
Hey, Ed, let me jump in quickly on the yen. Of course, as you needed to rebuild, there's been a bringing back of yen into the country. You got to pay for it with yen. What's your outlook on the yen right now?
Well, the strength of the yen has been astonishing to some. We think that when the yen went up to 76, it was actually mostly caused by foreign buyers entering the Japanese stock market. You remember, you've got to look at the numbers. There's been billions and billions of dollars of purchases, mostly through the EWJ that you were citing earlier. A lot of foreigners are getting long Japan, especially in the professional market. People think that the valuations, maybe we aren't at rock bottom, but it's not going to get that much worse. There's sort of only one way to go but up. So what we're looking for is in the third quarter, Japanese retail to come back to the market and Japanese institutional investors come back to the market. And that, again, conceivably could cause a significant uptick.
We got to leave it there. Ed, good to get some time with you. I know you're headed back home, so have a safe trip home.
Thanks very much.
Ed Rogers, he is the CEO of Rogers Investment Advisors.